How much money have I made after investing for 3 years? Let me show you. Hi, I'm Bojana. I'm based in Chicago. I have masters in economics. I have 3 portfolios. If this is something that you want to learn about as well, subscribe, send this video to a friend, and feel free to ask me anything in the comments. If you are investing already, let me know how long you have been investing for and what is your current return. My current return, by the way, is about nearly 20% average annual for the past 3 years. Obviously, the past 3 years market has been going up and up, and I think we're due for correction, a very painful one. But let's not talk about the bad things before they happen. I'm gonna share with you the return, the amount of money I have so far on each asset I own, and at the end of this video I will basically share the total number of return. First things first, my top asset by return, at least in dollar value, is Google. Google stocks has brought me so far over $2,000. I like Google. I think they're a great company. Financials are great. They are kind of the god of the search market and the ads and everything. So I keep investing in them. And currently I have over 2,000 in return. SPY, S&P 500 ETF, I have almost 2,000 in return, $1,800. IAU Gold ETF, I've made almost $1,000, $945. BTI, total US broad market ETF, not S&P 500, but still a lot of different stocks, $827. QQQ, NASDAQ 100 ETF, $707. I think if you want to invest in tech, you will be better off buying QQQ than investing in individual stocks if you don't know how to analyze those individual stocks. And obviously, as you can see, investing in individual stock may pay off more compared to investing in a tech ETF. Moving on, VOO, S&P 500, $589. Now you will think, why do I have like different amount of return for different S&P 500 ETFs? Shouldn't it be the same? If you pay attention, they position the number of ETFs I own. So that is different because I have been investing throughout, 3 years, and I haven't been investing different amounts. So that's why I don't have the same return amount, like dollar amount wise, on the same type of ETF. Moving on, did I say about IBV? IBV also S&P 500 ETF, $525. Apple stock, I'm kind of disappointed in Apple. I might make a video. Think of selling Apple. Do you own Apple? Let me know in the comments. Are you thinking of selling it or keeping it? But yeah, I have made so far $485 on it. Nvidia, $436. Here's the thing. I guess I'm not the biggest fan of AI, but I do like Nvidia. Just the fundamentals of this company are great. It is overpriced. Oh yes. So yeah, I will also make a video on why I love Nvidia and why I will keep buying it. Amazon, $435. Meta, $323. VEA is Vanguard's ETF for developed markets that exclude the US. I don't want to be too dependent on the US, even though it is the largest stock market of the world, but you still want to try to minimize the impact of any potential fall. So here we have $228 on VEA. Now, I don't expect getting much from it. I add non-US positions and non-stock positions with hopes that during a stock market dip or crash, they will not bring me as much loss as more highly volatile things like stocks. Moving on, IBKR, what is it? It's a stock of my broker actually, which I got as a part of some sort of referral program. I never bought it. And yet I have like the highest percentage of return on this stock, 156% of return. I need to really look into it because I've never sold it, like I never bought it. But now as I'm looking at this return, I don't want to sell it either. Maybe I should buy more of it. I have $162 of return on it. IAUM, also gold ETF, but with a lower expense ratio. I only started buying it recently, so that's why the amount of return is just $147 compared to IAU, right? But I will be probably increasing my positions. This one has lower expense ratio, which means, by the way, watch this ETF video where I explain what expense ratio, why it matters. If gold goes down, at least with the lower expense ratio, I will be not in as much loss. ADP, automatic data processing. I made a whole video on why I like this stock and why I'm holding on to it. Watch this here. and I have $103 from it. Another Google stock that I have, this one, the ticker is GOOG without the L at the end. It's $92. Now we're going into some international equity ETFs. So SCHF, Charles Schwab's large and mid-cap stocks in developed markets excluding the US. Again, I have $62. IDEV, another large, mid, and small cap stocks, but that one is by BlackRock. IDEV gave me $57. Then I have American Express, almost $54. Financial sector is not doing good right now, but you know, when I analyzed it, when I bought it, I think at the beginning of this year, I like the fundamentals of American Express, so I decided to go for it. VGK, Developed Europe Equities, any market capitalization, issued by Vanguard, $53. BPL, Developed Markets of Asia Pacific region, $53. IEFA, BlackRock's Developed Market Stocks in Europe, Australasia, and the Far East excluding North America, $48. BEU, Vanguard's Market Cap Weighted Index of Large and Mid Cap Non-US Stocks, $28. Why all these international stocks, equity ETFs that basically most of them are kind of the same, like, the same companies in there, the same countries? Here's my thing. All of these are issued by different company. The same way that I have different ISA accounts with different banks and I keep my money in different banks, the same way I like to kind of invest in ETFs by different issuers. I think this is another way to kind of diversify, because you never know, something happens, something bad happens. At least I have my investments with other fund managers as well. You know what I mean? So that is my theory. I don't know, maybe it is wrong. It is just my theory. Another stock, Chubb, $24. VCSH, I don't have much return. It's Vanguard's bond ETF that has US corporate 1 to 5 year long maturity bond. I have like $2 on it, but guess what? I didn't buy it to make any returns. Again, this is just my way of diversifying the portfolio, making sure I have bonds. Although this is corporate bonds. I'm holding it. I don't have much, but I'm not buying more. I'm not sure about corporate bonds right now. BSV is another fixed income ETF by Vanguard, US government and corporate, again, mid-term maturity bonds, almost $2 return. Now we're moving into the red section, okay? I have losses, some losses too. I have loss currently on XLF, which is S&P 500 financial sector ETF. Now, BWZ is international bond ETF. Its issuer is Bloomberg, and it says index of investment grade sovereign debt from countries outside the US with maturities between 1 to 3 years. Again, I'm right now with bonds. My strategy is short term, mid term, better short term, like ultra short term, like less than a year maturity. BIL, that's US short term bill ETF, $2 loss. ISHG, BlackRock, 1 to 3 year international treasury bond ETF, $4. Nobody's doing very well right now. Let's put it that way. No part of the world is doing well right now. I don't know. We're all in this rough patch right now. XLE is another sector ETF, S&P 500 sector, energy. Again, it's one of the top sectors of S&P 500, energy, by return after tax, but currently it's also going through a rough patch, so I have $19 loss. Eli Lilly, $28 loss. Novo Nordisk, $107 loss. I really bought it when I should not have been buying it. I mean, it's a good stock, but I bought it when the P was like 40 or something. Not the best time to buy. I should have waited it out. Both companies have great financials right now. Their revenue, profit is growing, debt is manageable. And last but not least, Accenture, $297. I recently analyzed it via my stock market analysis tool. I believe that it has good expansion potential. Their competitors, like consulting companies, Deloitte and all other like big four. I think Accenture stands out because they're trying to bring AI integration into their consulting service component, and I like that part. But they're going through a rough patch because they have relied on like government orders. They have lost those, I think, this year, so that's why I have a big loss. But fundamentals wise, I think this company stands a chance. That's why I'm holding on to it. So the total, after going through all this, the total return, $10,089. This is how much the return I've made basically on stocks. Now, as you can see, it is unrealized profit and loss. I have not withdrawn the amount. I'm investing long term. I'm investing for retirement, for my future house. This is the money I could get today if I sold all these things, all these stocks. But I'm not selling those because I know that thanks to the compound interest, it will grow more. So yeah, let me know, was that number surprising to you or not? Send it to a friend if it was useful, and I'll see you next week.